This fresh coat of the startup life has been sprayed on nice and smooth by Wagner and the Flexo series of paint sprayers. Startup Nation, my wife decided she wanted to rehab her childhood home. The goal was to fix it up and invite a nice family to rent it out. We knew one of the biggest jobs we had to undertake was painting. However, from the walls, the cabinets, and even the siding outside, it was going to be a big task. As entrepreneurs with a company to run, we knew this was going to take up a lot of our time, which is why we decided to get a paint sprayer. And after much research, we decided to go with the sprayer from the Flexio series from Wagner. Startup Nation, these sprayers are top-notch because of its flexibility to paint or stain walls, furniture, cabinets, and more. It's 10 times faster than using a paintbrush, which was a big selling point for us. And you can paint or stain right from the can. It's also easy to clean in 5 minutes, and being great for indoor and outdoor projects, a paint sprayer from the Flexio series clearly needs to be part of the arsenal in your garage. So if you're ready to stain your deck, or like me, fill your daughter's request of a bubblegum pink room, up your game with a paint sprayer from the Flexio series by Wagner. Take it from me, your time will thank you.
It's time to be about that life, the startup life. Here's your host, Dominic Lawson.
All right, Startup Nation. So I hope you're ready to receive some value today. My name is Dominic Lawson, and this is The Startup Life, the show for entrepreneurs and career-minded professionals. You know, Startup Nation, there's a lot of people who have tech ideas, and they see the glitz and glam of Silicon Valley billionaires, right? However, far too often, people fail to realize that there's the idea, and then there's the business of the idea, which is why today's guest is going to help us navigate those waters. He is an award-winning serial entrepreneur, angel investor, Forbes author, and keynote speaker. He is also the founder and CEO of Boss Capital, which is a boutique investment firm focused on Series C through Series B technology businesses. He is also the author of Meet the Boss, the agile playbook for startups. He is the boss man himself, Greg Shepard. Big Boss Greg. What's up, man?
Wow, what an intro, man. Thank you. I appreciate that. And thank you for having me. I appreciate it.
Of course, of course. Are you ready to pour some knowledge in the Startup Nation today? Because we can definitely use your help, my man.
I'm going to drop it.
All righty. For sure. So first things first, man, like share your origin story with us a little bit, if you don't mind.
Yeah. So my mom was a nun. My dad was a priest, and they wanted to take care of kids.
Okay.
And they couldn't do that in the church. So they left the church, and then they adopted and fostered a bunch of kids. Right. So I grew up pretty poor. Well, I mean, you know, like I think by today's standards, we would absolutely be considered poor. So
gotcha.
My goal was to try to figure out how to be successful. I also have autism and dyslexia and processing disorders. So it was especially hard for me.
For sure.
So, you know, when I was younger, I was selling Rubik's Cubes, and, you know, I was trying to hustle everything I could hustle to try to make money. And then I started businesses, and I started my first real business. I think I was about 19. And then I've done 12 of my own businesses where I started them and exited them over the last 25 years. And then 14 total exits, 2 this year already.
Very nice.
And so I've got, you know, 100% of the things that I've invested in or started up have exited.
Mm-hmm.
And in that process, I won those 4 private equity awards for transactions between 250 and $1 billion. Then, you know, I got the book deal with Forbes.
Right.
You know, I mean, I've written 100 articles for 29 publications. I've been on the news, you know, whatever. You get the idea. You know.
No, I got you. No, you're pretty accomplished, man. I'm not even gonna lie. For sure.
Thanks.
For sure. No, for sure. I wanted to ask you this, man, really quickly, because you kind of brought it up a little bit, because we always hear about, you know, when you start up a company, right? You know, you have to think about if you're like the stayer or the exiter, right? You know, so I'm curious about, like, you know, when you go into those investments or those startups or whatever, do you already have that idea for exiting? Is it a situation where you plan on staying and then, you know what, the opportunity presents itself where, you know what, we probably should exit? Kind of walk me through that thought process, if you don't mind, Greg.
Yeah, I mean, so if you're taking money from investors, you're exiting, right? Because they don't get their money back and their profit unless you do. So that's one thing. And
fair enough.
In the beginning, I didn't take capital from investors, but my plan was always to exit because
Gotcha.
if you're building a lifestyle business, you get it's a lot harder to build wealth by getting month to month money. It's a lot easier when you get a whole bunch of money at one time. Gotcha. So my concept was because, essentially money makes money. So if you're making enough to live on month over month over month, you're essentially burning up your ability to make money on your money. So if you do an exit and you take cash off the table, then you have the ability to get a bunch of money at one time, and then you can start deploying it in different ways to build wealth that way. So in the beginning, when I was starting, that was my plan. And so since then, I have developed this thing called BOSS, which stands for the Business Operating Support System. That's why that's what that is, and it's essentially a algorithmic process that I put together to help entrepreneurs succeed. Because my goal is to help with wealth distribution by helping entrepreneurs succeed, because that's the way that I can. Right. That's what I can contribute. So over 25 years and 1,200 interviews and 14 exits and all these awards and everything, the whole time I've been studying to nail down, an actual way to start, build, and sell a business in 3 years with 2 to 5x to investors, which includes the founder. And that's so, yes, everything I starts with the North Star. Gotcha. And the North Star is ready, aim, fire instead of ready, fire, aim.
For sure. Thank you for sharing that. Greg, you come off as quite the analytical, conscientious, thinker when it comes to business. Do you find that that's kind of an advantage in your opinion?
I think, now, I used to think that doing a startup was an art, but it's not. It's a science. The concept, the vision is an art. Right. So the ability to find a problem, figure out how to solve the problem, go through ideation, all of that, the visionary part is an art, right? That's something that people have or don't have. But what you do from that point on is actually a science.
Fair enough.
So they're all little processes, things that you have to execute. Everything's driven on KPIs. And the ultimate KPI, which are lagging indicators, meaning by the time the numbers hit, there's nothing you can do about it, are the financials. And the leading KPIs are the things that pivoted those financials. So once financials hit, basically in most of the time, there's whatever triggered those financials to change started 6 months earlier. So if you run your business based on the financial drivers, then it's like driving your car looking at the rearview mirror, right? So you have to drive your car by looking in front of you and learning from what's behind you, but you don't drive looking at what's behind you, which means you have to drive looking at leading indicators that pivot lagging indicators. That's an example of the science that I'm talking about.
Gotcha. Thank you for sharing that. Hey, quick sidebar, Greg. I know your book is not quite out yet. I think I seen somewhere where it's slated to come out in 2021, first quarter 2021. Is that still on pace?
Yeah. Okay. So COVID delayed it.
Gotcha. So, I figured as much. Okay. So really quickly, do you want this episode to come out the day the book comes out? Because I have a relationship with Nick DeMio over there at Forbes, and I've been working with him and stuff like that. So I can coordinate that to where this episode comes out the same day of the book, or we can do it before then. It's totally
we'll do a separate one.
Okay.
Yeah, we can do a separate one because what I'm doing is I'm trying to, I want to help. I mean, the whole reason why I'm doing this is to help entrepreneurs, right? Because I really dude, when you build a business and you sell the business, money moves to that entrepreneur who raised capital because they don't have money.
Gotcha.
Right. And then all the people that work there get paid, right? Distributions and options and stuff. So it's like, my passion, that's why I'm doing this.
Okay.
I don't need any more money. I just want to help.
I got you. Okay. I just wanted to make sure, look, I interview a lot of people. A lot of people have books. They wanted to come out the same day. So just wanted to make sure, wanted to be on the same page. And it also kind of directs how I say things. Cause usually I'll say that book is out today, so I wanted to make,
well, you're going to get contacted when the book is actual, when we have an actual date or when it's published, and then we'll do one and I'm going to give them away. I'm going to give shit tons of them away for free.
Sounds good. Sounds good.
Yeah.
Okay, cool deal. I appreciate that. For sure. So
Yeah. Thank you.
No, no worries. No worries. So Greg, I want to ask you this. You talked about the BOSS system, business operating support system. Kind of dive deeper into that a little bit. Kind of share with us, how it works and how it benefits entrepreneurs.
Sure. So when you look at a business, there's 5 stages in a business. There's levels of business, and we don't have time to go into all of them. But
sure,
you can start out with level 1, which is basically being reactive instead of proactive. And then when it comes to funding, the first one is pre-seed, and the second one is seed, and then there's series seed A, B. So there's 5 of those, right? And then there are 5 levels of the business. So you have ideation, and you're trying to come up with the idea and figure it out. You have proof of concept. You have validation, which is the company is now validated. You have a customer paying for it and it's validated.
Right.
And then you go into growth and then you go into scale, right? So there's 5 there. So there's all these different things. There's 5 levels of BOSS. Mm-hmm. The North Star, strategy, execution, standardization, and continuous improvement, Kaizen, right? So when you build a business, you have to start with the end in mind, meaning when people build a product, they have a customer, right? They have a problem that a customer has, and they build a product to solve that problem. Mm-hmm. When you look at selling your business, businesses buy other businesses the same reason why customers buy products, to either make or save money. And so once you identify that the business that's going to acquire a business is there to make money, which is the majority of the time, and that is a strategic. And strategics are strategics because they have already acquired, let's say, 10,000 customers. So they've already absorbed the customer acquisition cost to acquire those. Their ability to scale is the CAC to LTV. So the customer acquisition cost to the lifetime value equals a number.
Right.
And it's basically like the return on ad spend or return on investment or whatever the industry you're in. So how do they increase the customer acquisition to lifetime value number? Well, they have to grow the lifetime value, right? That's how they do it. So because they've already acquired the customers. So how do they grow lifetime value? By buying another product to sell to their customers. So if you want to be that product, which is going to give you the largest multiple, then you have to start by figuring out who's going to buy your product, just like, or your business, just like you start with who's going to buy your product.
Gotcha.
Then you make sure that your ICP, your your ideal customer profile and the acquirer's ideal customer profile are the same, because you can't build your business 5 years later and then say, oh, I want you to buy my business. And they go, okay, let's see if my customers that I've already paid for, that I want to get a greater lifetime value out of, will buy your product. You can't just do that at the last minute. You have to do it from the very beginning.
Gotcha.
So your strategy at the very beginning includes making sure that there are parallel in ICP acquisitions as you go. Otherwise, those customers that fall out of ICP won't even be considered. So if you're at the beginning raising capital to build your business, and you're building your business by acquiring customers, and those customers aren't in ICP for your acquirer, essentially you've just burned a bunch of capital, taken a bunch of dilution, all for naught. So the North Star is the most important part, and that is, what is your business? What is your product? Why should somebody buy your business? Why should somebody buy your product? Who should buy your business? Who should buy your product? When are you going to sell your business, and how much do you plan on selling it for?
Right.
All of these things are really critical, especially the when and how much. When is how long you're going to burn cash. How much tells you how much your business should be worth at the end, so you don't overprice your deal when you're raising capital in the beginning. So one of the things that I see all the time is a company comes in, they say, oh, I'm going to start my valuation really high. And there's a lot of reasons why they do that. This is an entirely different conversation.
Right.
But they'll say, I'm going to start my business at a $10 million valuation. I'm raising $5 million. So they're thinking now it's 15. But the investors want to take off the table 2 to 5x. So at a minimum, you're already looking at a $30 million business. You have 3 years to go. So you've already overpriced your business, which is going to make the next round and the round after that incrementally more difficult. And in order to get to the higher valuation, you have to raise capital, which then raises and you get caught in this loop.
Right.
And so there are 5 main reasons why businesses fail. And the majority of those reasons happen when they start their business at the beginning. And the North Star is supposed to mitigate that stuff. So it sets them up for success, leaving only planning and execution and optimization.
Gotcha. Let me ask you this quick follow-up. How do you crystallize that North Star? Like, what does that look like? Because because like people, like you said, like people overprice their companies and stuff like that all the time. And then right then from the beginning, you're already kind of not necessarily leading from behind, but you've kind of not necessarily setting yourself up for success.
Yeah, you start out. I mean, there's a sheet that I use. If you go to my website, there's 60-second videos and templates and all kinds of stuff that you can get for free. That you can use for this and guidance. And we're starting an academy through a few universities to teach. I've been teaching at universities, so now it's going to be a formalized academy.
Gotcha.
That businesses can go to. But that gives you the details. But essentially, what you're trying to do is you're going to try to say, what is my company? Like, what is actually my company? And then what is my product? They're not the same thing. A lot of times entrepreneurs mix up their company with their product. The outcome of their company is the product, and the outcome of the two of them is the exit, the valuation, right? That's how the value, and there are value drivers. So you think of value drivers as valuation drivers, and there's 5 valuation drivers. Okay.
Gotcha.
The first one is you need to understand how much your minimum ARR is, so annual reoccurring revenue is, to see if you're even ready to be acquired. Like your acquirers will say you have to be doing a minimum of $5 million a year or $2 million a year in annual reoccurring revenue. So that's the first one, just to qualify yourself to be acquired. The things that pivot your multiple are growth, margin, and retention. So growth says that all these things are in ICP, meaning the right ICP, the right ideal customer profile that the buyer has also, the acquirer of your business. So growth says you can sell to the ICP and they'll buy it. Okay. Retention says they'll keep paying you, so it's sticky and they can count on the revenue and project the revenue out.
Gotcha.
And margin says you can do it at scale. And attachment rate is the 5th one. And the 5th one says these ICP customers will buy this product. So the buyer, the acquirer of your business's ideal customer profile acquires your product. That shows attachment rate. That combination of things says you're ready to be acquired and you're already on the path to make that happen at high multiples. Now, the rumor is they're always like growth. Investors, you guys got to be very careful when you're talking to investors, because most investors haven't been operators. They don't know what it's like to operate a business. They're looking at numbers, and investors can put their own investments out of business. And it happens all the time. Right. VCs and stuff, right? Because they drive in the wrong direction because they're not operators. And they count on 90% of them failing anyway. It's in their risk. So, but you can't have you fail, right? As an entrepreneur. So you need to be responsible for your own success. So it's way easier to increase your multiple than increase your revenue. Think about this.
Right.
To take a multiple from 3 to 4 versus take your revenue from 1 million to 5 million, right? It costs money, dilution, effort. There's scaling problems, all kinds of stuff that happens when you're trying to go from this number to that number. But if you increase the multiple, you essentially have the same result, meaning the exit amount, the liquidity event itself, the amount you get from the business is the only thing you focus on. So I start out by saying, look, how much do you want to sell your business for? And they're usually like 100 million. I'm like, okay, all right. How much do you want to make yourself? And they're like 5 million. I'm like, okay, you don't need to sell for 100 million. You can sell for less than that. It's how you handle the process that determines how much you make. And you have to clock that as you go, because you can get carried away with it. I tell people it's like a checkbook. In the old days, you'd have a check register. Mm-hmm. And every time you wrote a check, you'd go in and say, take that check out. Now what's my balance? Right? Same thing with your capitalization table, your equity, your stock, and the account. When you're raising cash, you're taking money out of your bank account. It means you have to either sell for more or you have to take less on. You get less at the liquidity event. So all of this stuff you plan for in the beginning. And it seems, and I always argue with investors on panels and stuff about this because their perspective is different, right? But if you're an entrepreneur, if you don't plan for this ahead of time, just think about how dumb that is, right? You're like, oh, I'm going to wait until a year before or right when I want to sell, and then I'm going to start planning for that. Like it's too late by then.
Right.
It's, so you have to do it from the very beginning all the way through to the exit so that you're ready to exit and you already know your numbers.
Right. Imagine that part about knowing your numbers is super important. It makes me think about something we had a past guest on, Marcy Harris, and she's the CEO of PopVox, and she talked about how everybody, when it comes to tech, everybody thinks they have to go out to Silicon Valley. You got to go to the Valley to get investors and stuff like that, whatever the case may be. But she talked about how there's like this movement or this thing about trying to understand and get startup founders to understand that it's very important to focus on building, like, generating revenue and cash flow and stuff like that, on building as opposed to raising money and stuff like that. What's your take on that? Because we see a lot of people who are out like, got to raise money. And then all of a sudden, poof, they're gone. So if you would talk about that a little bit.
I think that, if you think about this in terms of like your business, mm-hmm. and you're trying to choose whether you build, meaning increase revenue versus raise capital. Yes, of course, you want to try to fund your own business.
Right.
But what is the definition of build? That's the question, right?
Fair
Are
enough.
You just recklessly raising capital by selling customers that will buy your product, or are you selling in ICP customers that will also buy the product of your acquirer? So
Gotcha.
You don't just want to build revenue, you want to build the right revenue. That's critical.
Right.
Because if you don't, you're going to have retention problems, which is going to reduce your ability to get a good valuation or even sell in the first place. And if you don't remember the 5 things I talked about, and if you don't go out and get the right ICP, it's going to reduce your attachment rate, and that's going to reduce your multiple, because the acquirer is going to say, yeah, well, only 50% of our customers are going to buy your product. Therefore, we're going to give you a smaller multiple. So building is a very broad term. And this is the argument I have all the time. Like, oh, it's growth. No, it's not. It's multiple.
Fair enough.
Right? I mean, multiple comes from quality, and quality comes from growth, quality growth.
Gotcha. Thank you for sharing that. You often talk about the startup maturity life cycle. Kind of break that down for us, if you don't mind, Greg.
So the life cycle is basically going from a point of where your business is in ideation. It's like it's growing up, right? Mm-hmm. It's a baby and it's trying to find its way, and then it's a teenager and it's reckless and crashing into things and fucking up all over the place, right? And then it becomes a young adult and it's going to school and it's semi-independent, and then it becomes an adult and it's still learning lessons, and then it becomes a mature adult and it's set and ready to go. That's like the maturity life cycle. Mm-hmm. So you have to understand where you are so you know how to handle your business that's stage appropriate. So the boss system handles this, right? Because what I found out when I was putting together boss, I studied all these operating systems like Six Sigma and OKRs and OGSM and Scrum and Kanban and just everything, right? Mm-hmm. And trying these out, it needs to be stage appropriate. And there was a lot of things missing, like the North Star. But the levels of a business determines the maturity of the business, and the company has to be mature to a certain level in order to be acquirable by somebody else at a high valuation. So otherwise, they're going to go into your business, they're going to look at things, and they're going to start marking down the valuation or adjustments to different areas of the liquidity event cap table, whatever it is that they're using to process that. Mm-hmm. And it starts eating away, right? Because they're like, oh, I don't know how to run your business. There isn't a synergy here. We have to do integrations. Your retention numbers are low. We only 50% of your customers fit ICP. It goes on and on, right? And they try to disqualify different areas of your business to reduce the amount of money that they're paying for it. So, this process is really critical, and the revenue that they're buying, if they're buying your company for your revenue, which is should not be the case, because selling on EBITDA and selling on top line are two different things. Somebody selling on EBITDA is trying to add to their profit and loss. Somebody buying on top line is trying to enhance their balance sheet. So they're buying either for balance sheet or for P&L, profit and loss. So when you do that and you understand that, you find the right acquirer, that acquirer is going to give you higher multiples because they see the synergy of your product and their customers. So revenue is a key to that. So just growth? No. Quality growth defined by what I said? Yes.
Gotcha.
But growing at a rate where the company can handle the growth is key too, because you could put yourself out of business by growing. You have to understand your contact to contract cycle time, your contract to active cycle time, and your active to revenue cycle times, because there's latency from the point you sign a contract to the point you get the money. And then there's latency from the point you hire a salesperson to the point where they actually start booking sales. That latency can be a year in a lot of businesses. So, planning for growth means planning for that. Now, what's the end of that? Now you have all these customers, service delivery. They're going to impact it. If that doesn't work out right, then you have retention problems, which is one of the 5 drivers. So planning out your growth strategy and using the top line numbers to make sure that you're getting quality growth, it's not as simple as growth. Anybody that says that is old school.
Gotcha. Thank you for sharing that. And we want to shift gears here before we do a quick reset. Once again, Startup Nation, we're talking to Greg Shepard, the founder and CEO of Boss Capital Partners. If you go to GregoryShepard.com. Sorry about that.
GregoryShepard.com.
GregoryShepard.com. We have a link there in the show notes. Startup Nation, if you listen to the replay on the podcast, you can get some of these, these tools and this knowledge that he's talking about, for sure. I'm actually on there right now, and I'm actually looking at a video where you're talking about student entrepreneurship, because I know we've been seeing this in universities, where more and more universities are kind of offering those entrepreneurial type classes and stuff like that, as opposed to just straight up business classes. So what's your take on student entrepreneurship, if you don't mind me asking?
I think that student entrepreneurship is incredible. Mm-hmm. I mean, how many people go to school forever, get out of school, and can't find a job?
Right.
These guys and gals go to school to learn how to create a job, not just for themselves, for other people.
Right.
I mean, traditionally, the United States leads the way. My problem is that 90% of them fail, and I don't want that to happen. That's what I'm trying to solve with the business operating support system, right?
Gotcha.
Is trying to increase the number of entrepreneurs that succeed, because we're a country of incubating opportunity. We need to figure out how to turn that opportunity or vision into executable results.
For sure. Thank you for sharing that. And so it made me think about something I saw in our prep. You've coined this phrase, altruistic capitalism. We know the word capitalism, depending on who you talk to, could be a dirty word, it could be a nice word. So kind of talk about, your viewpoint when it comes to altruistic capitalism. Because when you talk,
I think that there is a path to use the motivation of capitalism, right, for altruistic purposes. Mm-hmm. So, as an example, I have a fund, right? I have a syndicate, and we fund businesses to get going. And when that business sells, the entrepreneur makes money, and so does the investors. And the entrepreneur gets pulled out of a inconvenient financial situation to a completely different financial situation, and that is altruistic capitalism.
All right, Startup Nation, so we're going to go ahead and take a quick break. We got to pay some bills. Once again, my name is Dominic Lawson, and you're listening to The Startup Life. Tresta powers this episode of The Startup Life. Okay, Startup Nation, I want to talk to you about our sponsor, Tresta. Tresta is an app for iPhone and Android that lets you do business calling and texting from anywhere. I know so many entrepreneurs that are still using their personal phone number for business calls. It can get complicated drawing the line between your personal and professional life. Startup Nation, this is the best business phone app out there. Whether you just need a business phone number or if your team is ready for a complete business phone system, Tresta is totally flexible and can grow with your business. And it's all unlimited calling, texting, and all of the powerful call management features like auto attendance, call recording, user groups, and more for just $15 per user per month. With Tresta, there's no contract, and you don't need any special hardware, just your smartphone you're already using. Tresta is easy to configure, so you can set everything up yourself, all online. avoiding all the hassle and high overhead costs of setting up a traditional business phone system, which is important because as entrepreneurs, we are always trying to cut cost and time. They're offering a 30-day free trial so you can see if Tresta's virtual phone system is right for you. Communicate smarter and more efficiently with Tresta. Start now at Tresta.com/startuplife. That's TRESTA.com/startuplife. The link is there in the show notes if you're listening on the podcast. Tresta, business communication simplified. All right, Startup Nation, welcome back as we continue our conversation with today's guest here on The Startup Life. For sure. Because it made me think about that when you were talking about like student entrepreneurs are not just only looking to build a great business, but they're also looking to create jobs for other people. And I think in this day and age, that's always, creating jobs is always a good thing. I can't really see why it would be a bad thing, but to have that mindset at the student level, I'm not going to say it's not, I'm not going to say you don't always see that, but it is kind of reassuring to kind of hear that this generation is thinking of more than just, the bottom line and profit margins and stuff like that. What's your take on this generation's take on not just, altruistic capitalism and stuff like that, but also how they kind of dive into social issues and they're trying to affect change, even though they're not necessarily in, political roles and stuff like that. What's your take on this generation of social changers?
I think it's awesome. I mean, I think that the evolution of humanity has been going the right direction, generally speaking, with the exception of this Trump situation. I think that the situation has been evolving in the direction it should go, generally speaking, meaning even with this situation that's going on right now, it's still better than it was 50 years ago.
Right.
It's not going at the speed we want it to. Unfortunately, some humans can't handle progress that fast, but it's going in the direction. Generally, if you put it in a line graph and you list out a whole bunch of things that were pretty rough socially, and then you say, have we seen improvement and what percentage, are we to complete resolution on these issues?
Right.
It's trending the right. It's just going really slow. But it's trending the right way. And the biggest spike happened, with Gen Z, right? Where they started to say, listen, I care more about, our globe and the progress of humanity and the environment and everything that lives on the planet,
right,
than I do making an extra 10 grand a month, or than I do getting a nicer car. And this is just beautiful. It's just, I think that the newer generations are incredible. And, even to the point that, you have the student entrepreneurship, that shows that there is such a demand by this generation that the universities had to respond.
Right. No, we're seeing, there was a study done not too long ago where, when it came to millennials, 32% of them see themselves as starting a business. But when you ask Gen Z, it climbs up to like 46%. It's almost as if each generation is becoming more entrepreneurial than the previous one. So I wanted to kind of get your take on that. And, Startup Nation, we're actually talking to Greg on Zoom, and, he had his video up earlier. I think it actually might still be up now. But, I saw that you had like, a Black Lives Matter kind of, art on your wall, and you have a hat and stuff like that. I want to ask you this: in this, day and age of social unrest and social change and social activism, if you will, we've been seeing a lot of companies, a lot of people kind of take a stance, on either side, believe it or not. But, I guess I'm curious, to those who are not sure, no matter what side they're on or whatever the case may be, when they decide to take a stand with their business, what kind of advice would you give them? Because they're not sure if they should do it, should not do it. What's your advice would you give them?
Yeah, I think first of all is the understanding that this is not political.
Right.
This isn't a political thing. This isn't a right thing or a left thing. Anybody that turns it into a political thing needs to question their own moral compass.
Gotcha.
Because this is a human thing, right?
Right.
These are everybody. Whatever the discretionary is, or the racism or, I mean, you have the gay people and then you have the Mexicans and the Arabian people, and the black people have been on that compass forever, unfortunately. Right. And you have to set back and say, look, this is a moral thing.
Mm-hmm.
If those people that believe in God, I mean, would Jesus be sitting here saying, oh yeah, this is cool?
Right.
I mean, come on. Right. Like, so this is a moral thing, not a political thing to start out with. And on that basis, as a business, would you be saying, oh yeah, shootings are okay? Right. Is shooting anybody, somebody because they're a Muslim, beating up a gay person,
mm-hmm.
shooting a black person, it doesn't, these are human beings. I mean, like, it's just, to me, so ridiculous that there's even a conversation about this.
Right.
It's just insanity, So I think that if you're a business, you should be saying, look, this is not okay with me because we are a moral business. This is not a political topic.
Got you. Understood. Thank you for sharing all of that, for sure. And, with this social unrest and stuff like that, we're actually going through a pandemic as well. I think sometimes we forget about one or the other when we're addressing one of those things.
It's like a dumpster fire, right?
Man,
this is ridiculous.
Honestly, when it got to fire NATO's, I was done. At that point, I was like, man, look, I can't do it. I can't do it. Once I started seeing that, I was like, man, are you serious right now? Like, that's what we're doing? Because it instantly made me think of Sharknado. You know what I mean? But that's neither here nor there. But I wanted to ask you this, because as we're in this pandemic and we're social distancing and we're masking up and stuff like that, or whatever we're trying to do, but a lot of us aren't really interacting with a lot of people. So there's one company that comes to mind when it comes to this era, and that's Zoom. And so Zoom has, quadrupled its revenue from last year. It went from a $9 billion company to a $130 billion company as of this recording, all in a matter of 16 months. But at that same time, with this kind of meteoric growth, it exposed some vulnerabilities. A lot of times people are like hacking Zoom meetings and what they're doing, this whole thing, Zoom bombing and stuff like that. I say all of that, Gregory, to ask you this, what are some of those lessons that a tech company or a startup founder or just anybody who's thinking about starting a company can learn from a Zoom, even though they're having this wild success, but it still had some vulnerabilities? In your opinion, what are some things a startup founder can learn from this story?
Well, one of the things that I do with my portfolio companies is I do what's called wargaming.
Okay.
Right? And so the military does this process where they basically try to play a game that determines what could happen in the future.
Gotcha.
And anybody that had done wargaming in the past would have missed this one, because this is like, what the hell? But really, if you watch Bill Gates' documentary and everything else, it was like inevitable, right? Because we've had close calls before with swine flu and bird flu and Ebola, and it's just like, it's a matter of time, right? So if you had war game that out and planned for this would be a huge opportunity in a market like this, right? You have bull markets and you have bear markets,
right?
So bull market is an aggressive market, a bear market is a little. What you see that in a bear market, people pull back, coil back, and they start trying to save money. So if you look at businesses, like I said earlier, that save money and businesses that make money are bull market businesses, and businesses that save money are bear market businesses. So if you have a bull market business, you need to change your narrative so it looks like a bear market business, aka saving other companies money. So we have companies in our portfolio, and we just went to them and said, all right, let's change our demand generation, all our messaging and our narrative around this, businesses that are appropriate for the stage that the country is in or the economy is in right now.
Right.
And to the other point, with regards to, COVID, in World War II, 516,000 people died, Americans. Okay. In that was World War I. World War II, 405,333 people died, Americans. Right. In Vietnam, 282 died. That was U.S. and all of the allied people.
Right.
The Iraq War was 4,424 people, and in Afghanistan, 372,000 Americans died. And as of now, COVID has killed 184,083 people.
Right.
All right. So this is the only war that has killed more people than this is the Vietnam War, or sorry, not the Vietnam War, the World War II, right? Which is the war of all wars. Right. And they're saying that 200,000 people will die by the end of the year. So not only is that an opportunity, but it certainly should be a message for those people who think this isn't real. Just as an American,
sure.
We are fighting a war that's killing people.
Right.
That didn't volunteer. So let's pay attention to that, right?
For sure. Now, I think about, me and my wife, we were comparing that to, I think it's like 180,000, like you were saying earlier. That's comparable to a Tallahassee, Florida. That's comparable to a lot of small town American towns. Like if you just took one town and just wiped it away, that's the equivalent of how many have succumbed to COVID, which is just mind-boggling.
It's like, wow, right? Yeah. Like, holy crap.
Right. It is.
And they're saying before the end of the year, it's going to be over 200,000.
Right. That's just bananas to think about, and it's funny you mentioned that because I was, and this is kind of going back to, something we were saying earlier. And once again, Startup Nation, we are a political show, even though this is not a political issue. We're a political show. So I don't hope, anybody can construe that. But there was an article not too long ago about President Bush reading a book about the swine flu. This is 2005. And it freaked him out. He was at Camp David, taking some time off. He's at Camp David. He's reading this book and he reads about the swine flu. And he's like, we got to do this. We have to put implementations in place. And if this happens, even if it doesn't happen on my watch, this may become an issue later down the road. And so, it's funny how, a lot of, and I remember at that time, we badmouth Bush quite a bit, quite a few of us, you know what I mean? And so when you hear stories like that, you kind of like, didn't see that one coming. You know what I mean?
Yeah, right.
So that's,
dude, to your point, this is not a political show, but this is not a political matter. And this is a financial matter, right?
Of course.
200,000 people die. You got 200,000 people less contributing to the gross domestic product, right? There are financial ramifications. The people that are sick can't work. The people that can't work can't make money. They can't pay their bills. That means the people that own those properties that need that money, the rental income to pay their bills for the building that they own, can't pay those bills, and so on and so forth. So this situation to me is not political. This is an economic situation. So if people think about it, right, and they go, okay, I don't wear a mask and I have a party or I go out or whatever I do, right, and then I infect 20 people. Now there's 20 people that can't make money. You can see the effect, right? And this thing is a pandemic because the way that they categorize a pandemic is not just how easy it is to transfer from one person to another, but how deadly it is. So things like Ebola kill the host right away. So it's not as dangerous because it doesn't have a chance to spread because it kills the host right away.
Right.
This one doesn't kill the host right away. It doesn't even show up right away. So it's contagion as hell, but at the same time, it doesn't kill everybody, so it has the ability to transfer from person to person. This is actually more dangerous. So the situation financially is like, okay, everybody look at the situation, right? Let's make an adjustment to the way that we behave for a temporary period of time and put this thing out of business. Put this COVID thing out of business. In the meantime, it is springing up a lot of opportunities. To your point, Zoom.
Right.
Zoom was like ready to go. This hit them. They didn't make this happen. They caught a wave that was already coming. But there are a lot of things out there, educational software, conference software. There's a ton of, the reason why Zoom is booming is because it was the only one ready to go when people are transitioning conferences and meetings and all this stuff over. Schools, everything. But I've been seeing, tons and tons of new startups. So all these entrepreneurs that are thinking of all these ideas on how to make life easier and with a more safe environment. So I think that there's a ton of opportunities. So think about this. Opportunities are problems, right? You find a problem, you found an opportunity. Right. The harder the problem, the better the opportunity. You have to look at today's environment and say, holy shit, there are a lot of really good opportunities because there are a lot of really good problems.
Absolutely.
You know what I mean?
And a lot of those problems were already kind of there, but it's like COVID kind of unearthed them even more, where they're exposed even more. Is that fair to say?
Oh, totally. Like they're more important. They're more,
of course. Yeah.
The problems are more they're more on the radar
For sure.
right?
For sure.
If you went to people and said, hey, we need to have, I'm coming up with a software that enables students to take school at home, it would be like, yeah, there's a lot of people starting to do homeschooling, but now whole different world.
Exactly. My 8-year-old is downstairs right now doing her schoolwork because she's doing virtual schooling. So I definitely understand what you're talking about.
So think about this, right? I just wrote an article for a magazine. I can't tell you yet who it is, but I wrote an article for a magazine. The basis was the whole work from anywhere, right? So think about work from anywhere. Twitter, Pinterest, all these guys are like, fine, work from anywhere.
Mm-hmm.
Think about that just for 1 second. That means that the cities that these people were forced to work in order to earn the revenue that they need to pay for that city no longer exists.
Right.
So if you're in the Silicon Valley and you work for one of these, Facebook, whoever it is, right? Everybody's, all these internet guys are in San Francisco now. So you think about that and they're like, okay, they're making $200,000 a year. And now they can move back to their hometown, making $200,000 a year in a town where everybody's making 40. Think about the long-term effects of that. Those offices are emptying out.
Right.
Those people are taking their money and moving to other towns, which means it's leaving those cities. Like there is a huge ring after ring after ring if you were to look at this as a drop in a pond. And each one of those rings presents opportunities. And I'm telling you, look at that behavior pattern and you will see opportunities everywhere. As an entrepreneur,
it is funny you mention that because just the past 2 weeks as of this recording, we covered 3686 here in Tennessee. Every year we have an entrepreneurship festival, 3686, where we bring in speakers and stuff like that. And due to COVID, it expanded from 2 days to 2 weeks because it was all over Zoom or whatever case may be. But anyway, a economics professor at Vanderbilt said exactly what you just said, especially being here in Tennessee. He said he anticipates that a lot of more people who work at the Twitters or the Facebooks may move back or move to like rural areas, right?
Yeah.
Because like now you can just say, well, look, I can work from home now. I can do this now. I can go live in Antioch, Tennessee. I can go live in Brownsville, Tennessee. And so there may be opportunities there, just like you said, for a rural entrepreneur to kind of, kind of capitalize on that opportunity. So no, you
can buy a parking spot in New York City and you can buy a house outside New York City. Right. So
exactly.
And so that's going to change a lot of things right there. But then you have to add in the concept of, okay, well, what does that mean? That means collaboration that you usually do in the office space is not going to be there.
Right.
So how do we get coworkers to collaborate and get the benefits of that synergy? Right. That's an opportunity.
For sure.
They're all over the place because Zoom doesn't serve that.
Right.
Zoom is the equivalent of a conference room. That's what it is.
Right.
Right. So you have to say, okay, well, what else do people need besides a conference room if they're all working together, but not together?
Gotcha.
Right? There's huge opportunities. So to your point about the thing with Zoom was an indicator. So all Zoom was a leading indicator telling everybody, hey, there's an opportunity. Take a closer look at this.
Right.
Right.
For sure. Thank you for sharing all of that. And Startup Nation, we're actually wrapping up with Greg Shepard here on the Startup Life. I want to ask you this, man, because you talked about this earlier. You talked about growing up with some disabilities, autism and dyslexia. I know a little something about that. I'm pretty sure I'm on the spectrum somewhere, just went undiagnosed. I know my son is diagnosed with autism. So is my daughter as well. Let me ask you this, man, because I know a lot of times when you have autism, you're able to like super focus on things, right? Do you think that like, a lot of times people see things like autism as like a detriment, but it honestly could have been your superpower when it comes to business. What's your take on
it?
It
is.
Okay.
We are not, Einstein was autistic.
Right.
Bill Gates, Steve Jobs,
Right.
Richard Branson. You could go on and on. Elon Musk.
Right.
Just name it, right?
Right.
These people think in a different paradigm. So they see things that the other people don't see. And that is the magic, right? And so we all have this to contribute. I did a TED talk on this actually a couple months ago.
Right.
But this is a magical thing. Now, there are some nuances that you have to deal with that are a little bit different than other people.
Of course.
And as you get older, it becomes easier and easier. But these people need to be incubated, not set aside. You know, you need to realize, okay, how do we get more Einsteins? What is unique about Einstein?
Right.
Well, do we have other people like that? Well, we do. Well, then why are we throwing them into a trailer with a bunch of other people that and all combining them together and saying, here's a coloring book, just get out of my class.
Right.
Instead, why don't we take these people and say, let's find out what the magic is in this one.
Absolutely. That's actually what we're starting to do with my 14-year-old, my oldest, my son. We're trying to figure out what's the magic, right? I think right now it may be photography, but it may be something else later on. We know he likes photography, baseball, and the news. So we're trying to figure out where the magic is in that spectrum, or maybe it's somewhere else. I don't know, but I'm glad you said that, because I think a lot of times, when it comes to that, we, like you said, we just okay, this is the label. Let's throw them over there. That's what they're going to be for the rest of their lives, and not really trying to unearth those hidden talents and those hidden abilities. Because you can see now too, man, you can see like Microsoft and Apple and all these places have special programs for autistic people. Absolutely. Yeah, for sure. No, yeah. I appreciate you sharing that for sure. So before I ask the last question, man, I just want to say thank you so much for coming on the show. We definitely talked about quite a few things here, but I'm pretty sure that Startup Nation got definitely some good content, and I definitely learned a lot from you as well. But I'm actually going to turn the microphone over to you, man, because look, we have a lot of people out there who's feeling discouraged, feeling a little down. Give us some words of encouragement to take us out for the day, if you don't mind, good sir.
Sure. I mean, this too will pass. I mean, recessions happen every 8 years. When somebody's in a recession, they think it's going to go forever, right? I mean, this is a virus, and we have solved viruses in the past. The evolution that we're making as a species to fight through this virus, is it going to benefit us for years and years? So this is an exercise that's similar to the exercise that you have as an entrepreneur. Every step that you fumble is still a step. So you can stand in one place to get from one place to another, or you can walk. And if you walk and you fall, you get up and you still made a step. Right. So progress is happening whether it feels like it or not.
For sure. And I have to point out, Startup Nation, that that Greg has Richard Branson and Steve Jobs there on his wall, because I'm checking out the Zoom for sure.
Yeah, check this out. I also have Elon Musk. And the crazy thing is, my son, who is autistic, painted these.
Fair enough. Those are pretty. Oh, that's dope. Oh, that's dope. Yeah. That's pretty dope. Yeah. Thank you for sharing that. And that's going to wrap up this session of The Startup Life. Gregory Shepard, thank you so much for coming on the show, my man.
Thank you.
No worries. And as always, Startup Nation, if you have an idea, be about that life. The Startup Life. If you want to let us know what you think about our show, have an idea for a show topic, or would like to advertise on our show, send us a message on the Startup Life Podcast Facebook page. And while you are there, like and follow our page as well. It's a great way for us to engage with you, Startup Nation, and really grow our community. The link is there in the show notes. Subscribe to the show, as it can be heard on Apple Podcasts, Google Play, Stitcher Radio, Spotify, or even on your Facebook timeline, or any other platform you like to get your podcast. If you are listening on Apple Podcasts and you find our content valuable, please give us a 5-star rating, as it will help us climb the charts and help more people find our show. You can also listen to the show on the Startup Life Podcast new website. There you will find the all-new startup blog, where I write on many topics that are interesting and helpful to you on your path to entrepreneurship. And hey, if you have an idea, be about that life, the Startup Life.